I'm Tony Kaye, I'm the editor of Eureka Report, and thanks again for joining us on Property Point. I'm joined by Nerida Conisbee, Chief Economist of REA Group. Thanks for coming in, Nerida.
Thanks for having me.
Nerida, we haven't talked a lot about commercial property in the past, and obviously that's a huge area of the market. So what's actually happening in the commercial space?
Look, it's very similar to what's happening in residential. We are seeing very, very high levels of demand. Offshore groups are very interested in Australian commercial property, and conversely, we have a shortage of stock. So prices are rising, yields are firming, and it is getting really tough for buyers out there. A lot of the demand metrics are really good too. A lot of the tenant metrics are good. So, if you have a look at markets like Sydney, Melbourne, and even Brisbane now, we are seeing pretty strong levels of tenant demand. So very, very positive, but very, very competitive for stock.
So it sounds very familiar to residential.
It is. Even to the extent we are seeing very strong interest from Chinese-based property seekers as well. So China now dominates investment in offshore investment in Australian commercial property. It has done so for the last couple of years. We are seeing a lot of the US investors back as well. So even those metrics are very, very similar in commercial property as they are to residential.
Yeah, and you only have to look around the cities to see all the cranes going up in the CBDs, lots of activity going on that side.
Yeah, absolutely. Sydney is the one that's really coming up to a big shortage of space. If we have a look at the vacancy rate for industrial, the vacancy rate for office space, that's very, very low in Sydney. So it's almost at a crisis situation that if you're a tenant and you're wanting to locate in the Sydney market, it's going to get very, very expensive and very difficult. A bit different in Melbourne. So Melbourne has a history of building enough space, and we certainly places like Docklands and sort of the suburban areas have always developed quite. We've always seen pretty high levels of development. So the vacancy rate situation isn't as dire in Melbourne, but certainly there is very strong tenant demand. Brisbane's a bit different. So Brisbane saw quite a lot of speculative development occurring over the last couple of years. The industrial vacancy rate remains high, but the vacancy rate for office is starting to come down. So pretty good news there. I guess the market that continues to struggle is Perth. So like residential is struggling in Perth. We're also seeing the office market and the industrial market similarly struggle.
And I suppose, obviously, just like any other form of property, if there's a shortage, it's going to push up rents.
Yeah, it's pushing up rents a lot in Sydney. We're certainly seeing that's the case. Melbourne doesn't tend to see the same level of growth because of all that supply. So, but yeah, Sydney is really set this year to see very, very strong rental growth. And
retail, I suppose that remains a weak area, would that be right?
Well, not really. Retail's quite unusual in that we continue to see pretty strong demand for regional centres, so they tend to become stronger, more dominant. You only have to look at shopping centres like Chadstone to see how enormous those centres are becoming and what a centre of activity they're also becoming. At the other end of the scale, neighbourhood centres continue to do very well. So they, continue to be shopping centres that people drop in. They're always buying food. People always need to buy food. So they do well. The area that most people worry about are sub-regional centres. So, based on a discount department store, we've got Big W, Target, not doing particularly well. We've got threat of Amazon coming into the market. So Amazon are rumoured to be coming into Australia in September. And a lot of, it is likely that the type of stock that they're going to be selling online will be quite similar to what's available at your average sub-regional centre. So you kind of have at each end of the scale, you've got a big regional centre where people use it for entertainment. They spend a lot of time there, and then at the other end of the scale, you have the very convenient type retailing. So it's kind of the middle type of centre that will struggle.
Yeah, and I'm sure that's going to continue in terms of these online retailers coming in.
Yeah, it's surprising actually though, because when you look at online, Australians remain very resistant to it. If you have a look at the proportion of spending online, Australia is very low from a global perspective, and we haven't seen much growth at all over a long time period. So I think that's why there's many of us who are really interested in Amazon, because Amazon have cracked that model in the US, in parts of Asia, and if they can really do it in Australia, it will make a huge difference to online retailing.
I guess the thing with commercial too is that it's a very long-term process in terms of getting approvals, the whole construction process, and then leasing it out, etc. So when we were going back earlier talking about the shortage that all feeds into the shortage, I suppose, in terms of getting all those permissions through.
Yeah, absolutely. It's about an 18-month process before you decide to build a building to when you complete it. So it is quite a long time period between by the time you actually get the space. So that's problematic for Sydney. So Sydney at the moment, we're seeing a bit of development, not much, but on the other end of there's also issues with the amount of stock being taken out of the market in Sydney too. So the new light rail means we're seeing a lot of office buildings being taken out. So, it sort of adds to the problem of shortage of space.
Yeah. Well, thanks very much, Nerida. That's great to talk about commercial. And thanks for coming into the studio again today.
Thanks for having me.
I'm Tony Kaye. I'm the editor of Eureka Report. And we look forward to you joining us again next time.